The ranking member asked the question, why a tariff on coffee and bananas? I think the answer is obvious: to make our tax system more regressive. Does the Treasury Department or the various components of the FMOC have the authority to bail out Bitcoin?
That within the context of asset diversification within banks, they could hold many assets.
Do you have the authority to order banks to buy Bitcoin or to invest U.S. tax dollars in Bitcoin or Trump coin?
I am Secretary of the Treasury. I do not have the authority to do that, and as Chair of FSOC, I do not have that authority.
Chair recognizes the gentleman from California, our ranking member of our Capital Markets Subcommittee. Mr. Sherman, you're recognized for 5 minutes.
I want to agree with the gentleman from Michigan that we need to impose those sanctions on the Myanmar regime and protect, of course, the Rohingya minority to the extent we can. FSOC has to define what is systemic. I, for one, think that we shouldn't be focusing on the assets, but rather the liabilities. We didn't have a problem in 2008 because the banks had too many assets. We had a problem because they had too many liabilities. So I don't see how most—
Congressman, that's incorrect. Ben Bernanke, then Fed Chair, said, could you please tell me what these assets are?
I'm going to reclaim my time. Regardless of that, I'm going to ask you whether you— not going to ask you to agree with me. I'm going to ask you to agree with your predecessor, Secretary Mnuchin. During the first Trump administration, that Secretary Mnuchin promulgated interpretive guidance that prioritized an activities-based approach to systemic risk regulation over an entity approach. Secretary Bessent, you have indicated that you want to kick off a review of FSOC's activities and processes. The FSOC Improvement Act, led by my colleague, Dr. Foster, which I've co-sponsored, as you know, would codify an activities-based approach to systemic risk regulation. Does the FSOC plan to revert to the 2019 guidance of the first Trump administration regarding a definition of a CIFI?
Yes, we prefer an activities-based approach rather than an institutional-based approach.
Thank you. I want to pick up on the ranking member's comments about whether tariffs cause inflation. You know, economists can say when the price of something goes up by 20%, that isn't inflation. It's a one-time price increase. But out in my district, when the price of something goes up by 20%, we call that unaffordability. And to say it's not inflation is sophistry. I'll point out that every time Democrats had regulations that increased a company's cost, people in this room said, that's going to cause inflation. Well, tariffs clearly have to be paid by companies, and if environmental costs are passed through, you can be sure tariffs are passed through. The ranking member asked the question, why a tariff on coffee and bananas? I think the answer is obvious: to make our tax system more regressive, to pay for the big, bad, beautiful bills, cuts in taxes for billionaires, and to fund ICE. I used to head this largest sales tax agency in this country, and we knew the sales tax was regressive, but we knew it would be even more regressive if we imposed taxes, sales taxes on food. And that is what you do with a tariff on bananas and coffee. Mr. Secretary, we lived through the bailouts of 2008 when powerful men lose money. They now want a government bailout. Does the Treasury Department or the various components of the FMOC have the authority to bail out Bitcoin?
Could you please elaborate? What exactly does bail out Bitcoin
Okay,
mean,
could you
Congressman?
instruct the banks of this country to buy more Bitcoin, or change banking regulations so that they are encouraged to do so in terms of the reserves that they're otherwise required to have?
Again, that within the context of asset diversification within banks, they could hold many assets.
They can, and there are different, but do you have the authority to order banks to buy Bitcoin or to invest U.S. tax dollars in Bitcoin or Trump coin?
I am Secretary of the Treasury. I do not have the authority to do that, and as Chair of FSOC, I do not have that authority.
So we're not going to see our tax dollars invested in crypto assets?
Well, why would a private bank be your tax dollars, Congressman?
Excuse me, I'm now asking about the money of our taxpayers, which you manage as Secretary of the Treasury. Is it going to be deployed into crypto assets?
We are retaining seized Bitcoin.
That's not exactly taxpayer money. You collect a lot of taxes this month?
No, that is an asset of the U.S.
It's an asset of the
It is an
U.S.
asset of the
It
U.S.
was
government.
Are you going to invest any?
And I will point out,
Mr. Secretary, reclaiming my time, are you going to invest?
from
the
California,
asset
stop.
seizure, that $1 billion of Bitcoin was seized, $500 million was retained, and that $500 million has become over $15 billion.
Gentleman's time has expired. The gentleman from Oklahoma, the chair of our Monetary Policy Task Force, Mr. Lucas, you're recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Secretary, for being here today. You've said that the current deposit insurance framework is a vulnerability for the banking system, that there is a competitive imbalance that favors large banks, and that this increases the risk of bank runs and erodes depositor confidence. Can you talk more about a targeted expansion of deposit insurance for non-interest-bearing transaction accounts, and would that strengthen financial stability within the system?
Congressman, thank you for that very important question, because it is my belief, because there is the belief that big banks, the depositors, will not lose money. During a financial crisis, as we saw in 2023, assets leave small banks. And much of that is what is known as the payroll account. So I think it is very important for small banks to have one non-interest-bearing account that can have a much higher level of insurance so that they are able to retain deposits during a stress period. This is one of the reasons that we have seen assets leave small banks. It is one of the reasons that we have seen 50% of small banks disappear.
Continuing along this line of inquiry, Mr. Secretary, a robust banking system with healthy banks of all sizes reduces systematic risk across the entire system. Why is it important that Congress act now on targeted deposit insurance reform, not only for Main Street, but also our financial stability?
Well, again, deposit volatility, which is what you're referring to, is deposits moving during a stress time, does not benefit anyone in the long run.
And one more question on this perspective. Congress should look at giving FDIC authority to raise the coverage level for non-interest-bearing transaction accounts to an appropriate amount that is data-driven and put smaller institutions on a level playing field with larger banks. How would our banking system be safer with a narrow, targeted expansion, such as the one I've suggested?
Again, it would permit the small and community banks to continue competing. It would get credit to our Main Street, and it would stem deposit flight during a period of stress, which is one of the most, or one of the biggest threats to financial stability.
Focusing on a slightly different subject. Sometimes something I've focused on as chairman of the task force on Treasury monetary resilience has been strengthening market stability and liquidity. We saw occasional bouts of Treasury market volatility last year. How would reforms to banking regulations like the liquidity coverage ratio and stress tests incentivize market intermediation for banks and improve market stability?
Again, Congressman, wonderful question, that it brings more of our Treasury market onshore. And as you said, there were periods of stress last year. The market successfully navigated those. At the end of January, we had the third highest volume in the Treasury market, and the bid-ask spreads, very important for the financial well-being of the American people who are invested in money market funds, in bond funds, in their retirement funds. They have stayed right in the center line, and we are at a 5-year low in bond market volatility.
Thank you, Mr. Secretary. I yield back.